Can you really get a good deal in Dallas? Forget what you heard last year. Here's how Dallas home buyers are winning right now in 2025. Welcome back. I am Joran Ramsey, your Dallas realtor, and today we'll share 10 home buyer strategies that you need to know for 2025. The market is changing fast, from high interest rates to high inventory. Let's make sure that you are informed and ready. Here's the reality of what's going on in the DFW market. It's truly a buyer's market, and buyers, you have way more negotiating power than you actually think. Anytime a home has been sitting on the market for at least 60 days or more, this screams negotiating power. First things first, ignore the scary headlines. From listening to friends and family, to listening to the media where their job is to simply get clicks, focus on your financial profile. And if you have been steadily employed, you are ready to fire your landlord and kick them to the curb, you're more than likely ready for home ownership. I tell clients all of the time, some of the criteria that, let's say for example, your property manager uses to qualify you for a lease, these are some of the same qualifying factors that a mortgage loan officer would use when it comes to home ownership. So home buying does not have to be scary. And the truth of the matter is the market is not crashing. You just have more homes to choose from at better prices. So remember, the media's job is simply to terrify rather than to clarify. The more clicks, the more better, the more engagement they get, but it doesn't tell your story. And what we don't want to do is you don't want the media to make decisions for you, because here's the truth. They haven't assessed your financial profile. And here's the bottom line. If you've been renting for the last 5 or 10 years and you're paying $2,000 in rent, $2,500 in rent or more, here's the reality. You can buy a house at that same price. So the first strategy is to simply ignore the headlines. So next up, number 2, when it comes to getting pre-approved for a home, shop with a mortgage broker versus, let's say, going through your bank. So let's say if you bank with Chase, what you want to do is choose a mortgage broker over one bank's loan product. A mortgage broker, their job is to shop with many different lenders, and their job is to see who has the better interest rate, which will equate to better deals for you. And might I add, the pre-approval process is simple. On the forefront, they collect a few documents from you. They collect your W-2s, your most recent pay stubs within the last 30 days, your last 2 tax returns, and they run your credit and assess your financial situation. So if you have debts, if you have student loans, and I'll be honest, there's a myth. Student loans do not prevent you from buying a home. You just want to make sure that your student loans are not being deferred and they are in good standing. So always remember that when it comes to home shopping, student loans do not disqualify you from the home buying process. Let's get on to number 3. After you get pre-approved, stick to your budget. So there's a misconception that because the mortgage broker has approved you for, let's say, a $800,000 house, just because you were approved for a $800,000 home, that doesn't mean you have to spend that much. So stick to your budget. So let's say you have informed myself or the loan officer that, hey, I want my monthly payment to be around $2,500 to $3,000. Well, that's half of the $800,000 that you're approved for. If your budget is around the $2,500 or $3,000 mark, you're more than likely going to purchase a home that's priced at $400,000. Now, this is going to depend on your overall interest rate and your down payment, but roughly this is where we'll end up. And speaking of keeping money in your pocket, we have to explore zero down options for home buyers. Yes, no games, no gimmicks. There are zero down programs and products that you as a home buyer more than likely qualify for, and you don't have to use it. But I would challenge you to look into it and to see if it's a good fit for you and your family. So why spend your money when you can spend somebody else's, okay? So one popular product here in Texas. Write this down. It's called TSHAC, which is short for Texas State Affordable Housing Corporation. And this is a zero down program that will provide a grant for you and your family in order to make home ownership a reality. So sometimes when we get clients who are relocating to Texas, they might ask, hey, I am not a resident of Texas at the current moment, but should I move to Texas or buy a home as I'm, transitioning? Can I qualify for this program? The answer is yes. So this is some valuable information that people need to share and help get the word out. So you don't have to currently be a resident in order to take advantage or qualify for zero down programs. So there's one important question that I tell my clients to ask their mortgage broker when they're going through the home buying process. Ask them this question: based on my income, credit score, or family size, do I qualify for down payment assistance? This one question alone will just unpack amazing benefits for you to explore. Now, it doesn't hurt to just ask about this, but hey, if it's there and it works, use it. Followed by TSHAC, we have programs like the USDA loan, which it's eligible for homeowners who live in more rural areas. That's another zero down program. And then also, if you're a veterans, you need to take advantage of benefits that are rightfully yours, okay? I love servicing veterans. If you're a veteran watching this, I invite you to, give me a call if you want to talk about certain myths you heard about there and whatnot. There's a lot of misconceptions about the VA loan, but the VA loan, it's actually an amazing tool, and I think more veterans should take advantage of it, okay? Do not leave any money on the table, especially if you're working hard at your 9 to 5, putting in those many hours. You deserve a product that will help ease the load as you're navigating through life and trying to build wealth for your family. So, number 4, explore zero down programs. It doesn't hurt and it's free. Number 5, let's say you've been approved for a home and now it's time to go out home shopping. Let's negotiate seller concessions. Seller concessions, this is free money from a home that you have toured and you want to place an offer on. We'll simply request seller concessions, which is free money from the seller in order to help buy down your interest rate. There's a lot of hype and talk about high interest rates and affordability is being just shot and nobody can buy a home. That is not the truth. The truth of the matter is you want to craft an offer that allows you to have a lower monthly payment. And I'll use a quick example right here. Let's just say we have a home that's priced in the $300,000 range and you're interested in getting a lower interest rate. Here's a strategy. The data shows that on average, if you request, let's say $10,000 in seller concessions, which comes out of that homeowner's equity, you could save just about $300, give or take, on your monthly payment because you'll use that $10,000 in seller concessions in order to buy down your interest rate. This is free money. You hear that? Free money. So this is a common strategy that a lot of my clients and I take advantage of when it comes to the home buying experience, okay? Sellers understand that they have to position a buyer in order to be able to afford their home. So this is simply a common tactic and is nothing that's super hard or unordinary. Sellers know that they have to help a buyer afford their home, and this is how we do it. We request seller concessions in order to buy down your interest rate. Number 6, do not overlook new construction homes. The new construction process or building your home, it is simple. It's an easy process. The challenge is finding a builder that will fit your needs and your lifestyle in the community that you love. There's so many builders here in Dallas-Fort Worth to choose from. And guess what? We can create or craft a customized list based on builders that may fit your profile once we go through the discovery phase and you're ready for home ownership. Now, builders want to sell these homes, so they offer some killer incentives. I mean, interest rates as low as 3.9%, 4.9%, and 5.9%. This beats having an average market rate of a 7% interest rate. And we're talking about quality luxury builders that you might be interested in. So I know some people are looking for homes that, they may have a little more character. They stood the test of time, been around for, 30 plus years. But guess what? There are some amazing new construction homes that sometimes people overlook. Now here's a game plan with new construction. I always advise clients that if we're looking in a master plan community, which is a massive community with at least, 3 or 4 builders with different elevations, different price points, different floor plans, you name it. The number one strategy that we need to implement is purchasing a new construction home within the earlier phase. It's even better if we do it in phase 1. So when you have a master plan community with builders, they usually build in phases. So let's say they're going to have a total of 5 phases that they're building in that master plan community. And within each phase, they're probably building 100 or 200 homes. As they complete these phases, the prices tend to increase. So the people who purchase later on, they are purchasing at a premium versus when they should have bought maybe earlier in phase 1. Because as they build out phases, the prices tend to increase. And the people who are purchasing in phase 5, the prices will be higher versus phase 1. So that is a good strategy when it comes to locating new construction homes or building your home. Try to aim for an earlier phase. And guess what? It won't be perfect, right? The number one thing is if you can afford the home, if it's a good quality builder, and does the builder match your lifestyle and everything else that comes with it. You're comfortable with the school systems and the rest of the bells and whistles, like the amenity center, the pool, and walking trails, the total package, right? So when it comes to home buying, do not discount new construction. And guess what? Because new construction homes are more energy efficient, you have cheaper utility bills. And here's another thing. When it comes to home insurance, your home insurance is cheaper on newer homes versus older resale homes. So you just have some financial incentives when it comes to buying new construction. Remember, when it comes to buying new construction, 9 times out of 10, you get a cheaper interest rate versus looking at older homes. Number 7, if you buy your home in the fall or winter months versus the spring and summer, you will more than likely get a good deal. Home prices tend to be cheaper in the fall and winter months. And people don't understand that. Actually, the cheapest month to buy a home is October, and the more expensive month tends to be in May. The good thing about purchasing a home in October, you're home for the holidays. And that is amazing. So if you want to get a killer deal, maybe aim for closing in your home, let's say in October. And here's why it's cheaper. There tends to be less competition around this time, and you have a lot of motivated sellers during the fall and winter months. Another reason why homes tend to be cheaper, it's because school has started and homeowners are probably not trying to sell during the winter, and you have holidays around the corner, so they don't want to do as much activity when it comes to the home selling process. So sellers are more motivated during this time frame, October through February, versus the spring and summer months. Next, watch out for mud and PID taxes. Some communities around the Dallas-Fort Worth Metroplex, they charge extra property taxes for the infrastructure needed and for utility lines such as sewer or you name it. Because these communities are developed in the more rural areas or on the outskirts of the city limits, the developers, they need to charge extra funds in order to make it a community, in order to make it, livable. So not all PID or mud taxes, not all of them are super expensive. On average, you probably could add an extra $1,200 to $3,600 to your annual property tax bill, but this probably could impact your home buying power as you're getting pre-approved for a home. So always compare different communities, and on average, some communities around Dallas-Fort Worth could have an annual property tax bill of $6,000 all the way to maybe $12,000. Sometimes that huge gap, it could make a difference in how much you're approved for or how much you are willing to pay. So this is important when it comes to the home buying experience, is understanding the taxes for certain communities and how this impacts your monthly payment. Next, avoid the new car. It's simple. Did you know that when you finance a brand new car, and let's say right now the average car payment is $700, well, if you go out and finance a brand new car while you're going through your home buying experience, you have just reduced your buying power by $100,000. For example, let's say you were approved for $500,000. You didn't have a brand new car, but then you went out, you started car shopping, and you got that brand new Tesla, and your payment is $700. Well, guess what? That $500,000 approval amount has now been reduced to $400,000. My recommendation is to hold off on the brand new car until after closing, because this can impact your home buying experience and you don't want to do that. And if you absolutely need a car, maybe talk to your loan officer first, but avoid a high car payment. I mean, I've heard some crazy stories where people have a $1,300 car payment. I mean, that is a lot of money, and debts like those definitely impact your home buying power. So just hold off on that brand new car. And number 10, file your homestead tax exemption. Yes, here in Texas, the homestead tax exemption, it gives every primary homeowner a tax break on their tax bill when it comes to property taxes. Now, it's only eligible for one of your homes. So if you have, multiple properties, you can only have your homestead tax exemption on your primary residence. Now, filing for this form, you'll do it after you close on your home. It's simple, it's quick, it's easy, and it's free, but homeowners typically save about at least $400 per year when they file for this tax break. So there you have it. You have 10 powerful strategies to make your home buying experience easier, smarter, and affordable. If you found this helpful, hit that like button, subscribe for more real estate tips, and if you're ready to start your home search, I would love to help you map out a plan that works for you. See you guys on the next video.